Mr. Buffett and Mr. Munger, if you were going to live another 50 years, and we sincerely hope you do, and could add one additional sector or asset class to your circle of competence, which sector would it be and why?
Well, that's a very good question, and I particularly like the preamble. Well, you would certainly pick a sector that's large, because it isn't going to make any difference to Berkshire if we get to be experts on some tiny little industry or business. I would say that it would have to be something in the, this isn't going to happen, but if I could really become expert, and I mean really expert, knowing more than almost anybody else about the subject in the tech field, I think that would be terrific. It isn't going to happen, but it's going to be a huge field. There are likely to be, a few enormous winners, a lot of disappointments, so that the ability to pick the winners, is far disproportionate to the ability to pick the winners, we'll say, among major integrated oil companies, where they're sort of all equated in price. And you're not going to have a big edge in trying to pick Chevron against Exxon, against Continental, and Occidental, and you name it. But the degree of disparity in results among larger tech companies in the future is likely to be very, very dramatic. And if I had the skills where I could pick the winners there, I would do a lot better than if I had the skills to pick the winners in the major integrated oil field. You probably will have better luck with Charlie on this one, because he knows a lot more about a lot of industries than I do. Charlie, what's your answer?
Well, it would either be tech or energy. And I think that we're the wrong people to develop the expertise. I think if we were going to do it, it would have already happened.
Yeah.
Now, I do think we might identify somebody else who has abilities that we lack. That's been very hard for us, but
we're not going to tell you.
but we've done a little better lately.
If present rates were destined to be appropriate, if the 10-year should really be at the price it is, those companies that the fellow mentioned in this question, they're bargain. I mean, they have the ability to deliver cash at a rate that's, if you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember: you can never do one thing. You always have to say, and then what? And we're sending out huge sums. I mean, the President said it on Wednesday, 85% of the people, we're going to get a $1,400 check, or 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums. And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better. And people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. But there are consequences to everything in economics. But that is why the Googles and the Apples, when we don't own Google, we don't own Microsoft, but they are incredible companies in terms of what they earn on capital. They don't require a lot of capital, and they gush out more money. And if you're trying to find bonds that gush out more more money from the federal government. We got $100 billion that's gushing out, like, 30 or $40 million a year, or whatever it may be, depending on the short-term rates. So that puts the pressure on, which is exactly, of course, what the monetary authorities want done. I mean, they're pushing the economy and they're doing it in Europe, even more extreme. And they're pushing, and we're aiding it with fiscal policy, and people feel good, and people have become numb to numbers. Trillions don't mean anything to anybody. And $1,400 does mean something to them. So we'll see where it all leads. But Charlie and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we, Charlie?
Yes, and the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened with the professional economists. They were so confident about everything, and it turns out the world is more complicated than they thought.
We have 3 owners of Berkshire Hathaway Energy. We are the 91% owner, and there are no 3 owners that are more interested in pouring money into sensible deals within the utility industry, or are better situated in terms of the people we have to maximize any opportunities. We have never had a penny of dividends in whatever it is, close to 20 years of owning Mid-American Energy, and other utility companies pay high dividends. They just don't have the capital appetite, essentially, that we do. So it's just a question of finding sensible projects, and I would say that there's no group that is as smart about it, as motivated about it as our group. And with that, I'll turn it over to Greg.
In short, we're about as good as you can get, and you should worry about something else.
Yeah. But Greg, could you stand up and talk about? We really hope to spend a lot of money in energy.
Yeah, we've got a great portfolio as we finish out 2019, 2020, and it's really been focused on building the renewable energy projects in Iowa, expanding the grid. But equally, we do have those opportunities in our other utilities. The footprint in Iowa realistically is getting pretty full. As we had 100% renewables, Warren touched on it. Every time we get a new data center, that means we can build another 300 megawatts of renewables. We'll continue to do that. But when you look at Pacific Corp, where we serve 6 states in the Northwest, we've really just embarked on an expansion program there. The first part was to build significant transmission, so expand the grid, and then start to build renewables. But just to give you some perspective of the regulation that exists in place, we started that project in 2008, and we're realistically building the first third of it. But we do have the planning in place for the second phase and the third phase, and that's what you'll see come into place in 2021 and 23. And the reality is we'll continue to do that in NV Energy, with really, again, the focus being on both grid expansion, so we can move the resources, and then supplementing it with renewables. So it's exactly what you've touched on. And we haven't identified the specific projects yet, so we never put them in our capital forecast that we disclose to folks. But as they firm up and we know they will go forward, clearly you'll see some incremental capital, and that's capital we clearly earn on behalf of the Berkshire shareholders as we deploy it. Thank you.
Good.
We will put a lot of money into energy.
Yeah. We're really in marvelous shape in this department.